But this pointlessly destructive act has moved the possibility of Powell leaving the Fed from 4 months' time to the present. So at best, he's accelerated things by 4 months. At worst, it's a pointlessly destructive act that has destroyed an important institution that has delivered, on average, pretty low inflation for the United States and much better economic outcomes than we've seen in other countries.
Hi, I'm Jo Crawford and welcome to the Trump Report. Today I'm joined by Justin Wolfers, Professor of Public Policy and Economics at the University of Michigan. Thank you for joining me on the Trump Report today.
Joe, it's a pleasure.
So an investigation has been launched into the Federal Reserve Chairman, Jerome Powell, and according to a video that featured Powell that was published last night, he said that on Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas threatening a criminal indictment, which was relating to his testimony that he gave last June concerning a $2.5 billion renovation to the central bank's headquarters. What were your thoughts on this?
Trump has put his Department of Justice on the case of harassing Powell. They've trumped something about maybe lying about building renovations. The idea that Fed chairs have a big role in building renovations is ridiculous. The idea that Jay Powell has lied to Congress is ridiculous. The idea that there's a crime here is ridiculous. So unwind all of that. What you have is Trump has put his Department of Justice on harassing the Fed chair. He has threatened criminal charges. Why? He's threatened criminal charges because he doesn't like what Jay Powell is doing. So now let's wind this back and to put it in the language of economics. Trump is trying to, through brute force, take over the Federal Reserve and the conduct of monetary policy. So there's actually two huge sins here, if you believe in the rule of law. The first is the Department of Justice is meant to be about justice. It's meant to go after bad guys who do bad things, not pursue the president's political vendettas. So an independent organization has been rendered no longer independent. I don't think any of us believe that many of its recent actions have anything to do with justice. It's all about recrimination. So the Department of Justice that once upheld a value many of us hold dear, justice, has become the Department of Recriminations. That's the first thing. Bring a lawyer on, they'll talk about that. The destruction of the rule of law, that has already happened, and it's a huge problem. But now what we're doing is we're taking the Department of Recriminations and going after another independent agency. The independent agency is the Federal Reserve. What is it Jay Powell has done? Exactly what he's meant to do. He's an independent public servant, who's leading an independent organization. And his greatest sin in the eyes of the White House has been to serve the American people rather than the White House's political agendas. That is deeply problematic from an economic perspective. That now says the White House is using every power under its control to wrest control over monetary policy back from the Fed to itself. We're moving from an independent central bank to a politically motivated central bank.
On the other hand, Trump has denied any knowledge relating to this investigation. And when he was asked about accusations of political pressure by Powell, Trump said that I wouldn't even think of doing it that way. What should pressure him is the fact that rates are far too high. That's the only pressure he's got. But when you talk about this idea that when Powell says that on the one hand, the Fed should be able to continue to set interest rates based on evidence or economic conditions, or if monetary policy will be directed by political pressure or intimidation, tell me, what would that look like if it was under the latter, what you're referring to there?
So the first thing it would look like is completely at odds with American law. Congress gave the power to set interest rates to an independent Federal Reserve. It's a very complicated system, but it's a complicated system because Congress was putting together a political deal to make sure that all the different regions in the United States were represented. That's why we have 12 regional Federal Reserve banks. Congress gave that power to the Federal Reserve. It did not give it to the president. So the first thing is it would be undermining the role of Congress and the American rule of law. Second, what does this mean in terms of economics? So I could talk to you about economic theory all day, but let me be less boring. Let me actually just talk about history. Have we before had a populist strongman president who has an idiosyncratic belief in the value of low interest rates and excessive personal confidence. Yes, this is Erdogan in Turkey. And what did Erdogan do in Turkey? He appointed loyalists to the central bank, undermined Federal Reserve, the central bank independence in much the way that Trump is trying to do. Turkey went from having relatively normal rates of inflation to hyperinflation within just a couple of years. Inflation hit rates as high as 80%. Last I checked, it was in the mid-30s. The thing is, once you undermine the independence of the Federal Reserve, two things happen. First of all, there's an urge to run monetary policy in the politicians' best interests, as opposed to that of the American people. Generally, that expresses itself as low interest rates, and in fact, Trump has said he wants much, much lower interest rates. If you have interest rates that are much lower than conditions warrant, that causes inflation. That's the first thing. But actually, there's a second thing. One of the most important things that sets interest rates that sets inflation is people's expectations of inflation. Look, if I expect my costs to go up by 10% next year, if I expect my rivals to raise their prices by 10% next year, then I'm going to go ahead when I print up my menus for next year, I'm going to print those prices up to be 10% next year. So the reality is that the mere expectation of inflation can create inflation. Well, right now we have a Federal Reserve run by Jay Powell, who has an inflation target of 2%, and it's hit that target on average for several decades in a row. So on average, what happens right now is people wake up expecting 2% inflation, which is basically not very much. So therefore, they don't raise their prices by not very much. Therefore, you get the reality of prices not rising very much. But if instead we have a property developer in the White House running monetary policy based on political expediency, and he's already suggested he wants interest rates to be inappropriately low, then I'm going to wake up tomorrow and expect that interest rates are going to be excessively low, and I expect, therefore, that inflation will be excessively high. The simple fact that I expect inflation to be high is going to lead me, when I print my next set of menus for my restaurant, to bump up the prices, because I reckon prices are going to be much higher next year. And so the simple fact of undermining Fed independence creates an expectation of inflation that creates the reality of inflation. And I bet we're actually already seeing it right now. If you're trying to think ahead over the next 10 years, what is the chance that the United States has a hyperinflation? Look, a year ago, the chances, I would have said, were awfully close to zero. But now we're looking at a president who's taking over monetary policy the same way we've seen other tin pot dictators do so. And in every case, those tin pot dictators, not in every case, but in many cases, set off hyperinflation. So now, today, there is a very real chance of hyperinflation in the future. That's going to undermine all sorts of economic things, right? So am I willing to write a contract with you about investing in a new factory, hiring new workers, and so on, that's denominated in dollars? Well, there's a good chance those dollars are not going to be worth anything. Am I going to be happy to lend the US government money at low interest rates, where basically they're paying back in the future? Well, now I think there's a real chance that those future dollars that it repays aren't going to be worth much. Therefore, capital markets immediately are going to be much less willing to lend the federal government money, which means when you have a multi-trillion-dollar debt, a whole lot more in interest payments.
And is there something to be said about the timing of this, the timing that they've tried to choose this investigation? Because Powell, his term as chairman, it was due to come to an end in May, wasn't it?
Joe, that's an astonishingly good question. And it's actually one that I think every Republican should be asking themselves, because this is relentlessly, pointlessly destructive and doesn't do much. If Trump wanted to be rid of Powell as Fed chair, all he had to do was wait till May. It doesn't require much personal discipline to just stop thinking about monetary policy for 4 months. But this pointlessly destructive act has moved the possibility of Powell leaving the Fed from 4 months' time to the present. So at best, he's accelerated things by 4 months. At worst, it's a pointlessly destructive act that has destroyed an important institution that has delivered, on average, pretty low inflation for the United States and much better economic outcomes than we've seen in other countries. So this is just an absolute toddler impulse. There is no defending this. Even if you hated Jay Powell, even if you thought he was destructive, which no one does, you would counsel the president to wait 4 months and do it the right way. So this is just a toddler knocking over the tower of blocks in a fit of rage.
If it comes to May and Trump is set to be involved in the process of nominating the next chairman as well, I mean, do you have any indications of how this investigation could impact that? But also, are there any indications of who he might appoint? Or what names are out there?
Well, Jay Powell stood up last night, and he might be the last brave public servant left in the United States. And he stood up and he said, my job is to serve the American people. President Trump has made it so that it would be personally easier for me to exit the stage. I wouldn't have to deal with lawyers and criminal indictments. But that's not my job. I was appointed to serve the American people, and I doff my hat to Chairman Powell. I wish there were a few people in Congress who'd do the same thing. So Trump has the opportunity to appoint a replacement in May. He says he's actually already decided on who it will be. In all likelihood, his decision is either Kevin Hassett, who is a Trump toady from inside the White House, who's currently Trump's chief economic advisor and has never said anything with greater penetrating insight than the president is right, the president is always right, who has beclowned himself in really quite tragic ways. Kevin was once an economist. That's what makes me so sad and bitter about it. He knows better than this. Or Kevin Warsh is the other that people talk about. Now, actually, things have really changed in a quite dramatic way. Senator Tom Tillis of North Carolina came out last night and said he recognized what had happened, which is that Trump has so enormously tried to undermine the independence of the central bank and the role that Congress had set for it, that he is not willing to vote for a Trump nominee until this issue has been cleared up. If there's any spine left in the Congress, in the Senate in particular, they will simply refuse to appoint any Fed chair who's a Trump toady. So I think that actually it's possible that in the end, that Trump has actually damaged himself, that the biggest loser here will be Kevin Hassett, that there's a chance that the Senate will stand up. And, you know, we've all been praying for the Senate to finally stand up on something. Maybe this is it. Maybe I'm wrong. Maybe I'm an optimist. Maybe this is an institution that continue to sleep its way through destructive policy. But I think what it does is sets up an enormous fight over the next Fed chair. Trump has already said he is only going to appoint someone who is promising low interest rates, which is to say that Trump has already said he personally wants to be running monetary policy through who he appoints. My call to the Senate, and I'm absolutely serious about this, is under no conditions should they be willing to confirm anyone who has made such a promise, because such a promise goes both against legislative intent and the interests of the American people.
And how would you say the markets are responding to this news?
So we saw the markets respond somewhat unhappily last night, but actually less than you might have anticipated, given the darkness of how I've described all of this. And this is actually a different part of Trump's genius, which is he's broken the link between announcements and markets. Because the fact that Trump said something last night, it's dark and it's dangerous what he said. But there's also a chance that he wakes up the next morning and says, just kidding. And in fact, at some level, he's already done that. He said, no, I didn't direct the Department of Justice to do this. Now, that idea is preposterous on its face. So the problem is, if what you have is a president who backtracks, tacos, whatever you want to call it, half the time, and is also just floating test balloons half the time, then the market can't react because it's reacting to hot air and nonsense. It's an even bigger problem because this is a president who has a terrible set of impulses, but does understand the importance of listening to Wall Street, or even if you disagree with that as importance, feels restrained by Wall Street. But what he's done is, because he always backtracks, well, Wall Street doesn't react. And because Wall Street doesn't react, that now risks him not backtracking. So he's fundamentally broken one of the only functional feedback loops that we had. So if, to the extent that we're not seeing a huge impact right now, it's literally because no one believes the guy's going to follow through.
And how would you say that other Republicans are responding to this too?
So far, I've only seen a statement by Tom Tillis. Tillis is the head of the Senate Banking Committee. He's the guy who, he's also retiring, but he's been very strong. So there's been a few newspaper reports of MAGA congressmen. Now, the thing is, Congress, the House is so big and so many people are from extreme districts where simply stating MAGA is enough to get reelected, that there are some people who say, oh, interesting, good, they'd never go against the president. There used to be an institution in this country called the Republican Party. It was an institution that listened very closely to big business, that believed in financial stability and so on. And so the former members of that former party would be deeply upset by this. The question is whether they play much of a role in the current Republican Party. Tillis definitely does. You can look for people like Senator Romney and others who are part of the reality, more serious, earlier renditions of republicanism, the conservative Republicans. But whether they're still an important force in the Republican Party, we'll find out.
If Trump was to appoint a chairman that did try to achieve these goals that he was setting out of lowering interest rates, how do you expect the markets to respond to that? And longer term, what sort of impact could that have?
It's very hard to understand why it is that Trump is obsessed by low interest rates. Let me give you one theory of the case. It's called fiscal dominance. Fancy word for the day. How good do you feel that later on today you can tell your friends, hey, this looks a little like fiscal dominance? Let me explain what that means. Normally what we do is we ask the Fed to set interest rates so that we can create low unemployment and low inflation. That's their objective. A different thing you could do is you could say, holy cow, we have a huge government debt. If we could just keep interest rates artificially low, then we won't have to pay much interest on that debt. And then I've got lots of money to send out checks to people and tax cuts for the rich. Trump has spoken as if that's what's going on. So we call that fiscal dominance because it's the fiscal side, which is government debt, that dictates what we do on monetary policy, which now means, by the way, if interest rates are being set to reducing our nation's credit card bill, then they're not being set to keep inflation low, and they're not being set to keep unemployment low. So fiscal policy dominates the setting of monetary policy. That's why we call it fiscal dominance. So the consequences of that would be that we get worse inflation and worse unemployment as a result of this. Now, the problem is, if you start to threaten that, markets understand that raises the risk of inflation, which means markets don't need to wait for the inflation to occur. Already they're thinking to themselves, oh, I've got to lend money to the US government on a 10-year bond is basically a 10-year loan. They used to think that inflation and therefore interest rates are going to be low for a long time. Now they think there's a risk that they're going to be high. That in itself is enough to raise long-term interest rates. See, here's the thing. The Federal Reserve sets short-term interest rates. Actually, it sets the interest rate for one day between today and tomorrow. The bond market sets long-term rates, and it sets it based on expectations about the future. Trump wants low interest rates, and he's succeeded at lower. Will succeed probably at lowering. If the whole plan succeeds, he can get a Fed that will lower the short-term rate. But if that short-term rate's inappropriate, that will bump up the long-term rate, and that actually will increase how much interest we pay on our government debt. It will also, by the way, increase the price of a mortgage. Most important lending is in long-term rates. And we've seen this in the past, which is Trump has threatened the Fed's independence several times in the past. And in each case, what happened was he got expectations of short-term rates maybe down a little bit, but long-term rates go up. The thing is, the president doesn't control everything. Markets have a really big effect in the long run, and expectations have a really big effect in the long run. And the president appears not to have understood that while he can mess around at the short run, what really matters for the economy is the long run, and he's moving things in the wrong direction. It is time for the president to get some economic advice. And I don't mean from me, I mean from anyone with a pulse. None of this is hard. Every part of this is widely understood. But no one has had the courage to sit down and explain to him that not only is he destroying the foundations of American prosperity, he's actually undermining his own objectives.
Well, Justin, thank you so much for joining me on the Trump Report today.